in the Asia Pacific.
ROE is much more than that of our loan book growth.
The support for the Nifty is from from the trend line, which is a rising trend line from the lows of January.
While volumes were largely in line with estimates, it was a margin miss.
HDFC Life's premium numbers are very weak.
72,000, where the sensex is at right now.
Overall, will be low single-digit growth for next year, full year.
$150 billion worth of opportunities are looking available.
It was an operational beat on BPCL. Margins improved, and that is what the street seems to like.
Now the week-to-date loss stands at 1.7% on the Nifty.
Deliver more than $100 million of costs of synergies.
The luxury segment is also growing at a good pitch.
For the markets, we are above the 22,000 mark. Just a while back, we were not able to cross that.
Well, that is the day so far, and it has been a very, very tentative day throughout for the last many hours that we've been trading. We might be up about 50-60 points right now, but it really is not a very confident-looking screen out there. A little touchy and large amount of swings, 20, 30, 40 points here and there, just like that. This is Closing Bell. We're coming to you live from the CNBC-TV18 Motilal studios. I'm Prashant. With me, my colleagues Reema Surabhi here. Nigel is joining us from the newsroom. Guys, hi, good afternoon.
Hi, good afternoon. It's been a tough week, right? The Nifty is down 2%. The mid-caps have lost close to about 3%. And today as well, it started off with a lot more promise.
Yeah, actually, absolutely. I mean, it's been a bit of a struggle throughout the week, just trying to hold certain levels. And I guess now the fight is clearly 22,000. Are we going to at least close above that or not as the week draws to a close?
I know, absolutely. And, at higher levels, there is constant selling which is emerging, right? I mean, it's not as if there's no... it's not a clean kind of a day for if you're looking to play bounces. The bounce came and we did not break the lows of 21,930, but there is a high level selling which is coming in. What is 21,930? It is basically the support which lies on the rising trend line starting from the January 2024 low, touch point in April low, and then of course where we got to yesterday. The low today I think is about 21,950. So got to pretty close to those numbers, but did not break it. Broader markets are doing better, and I think that is a consolation. Advanced decline is not quite 2:1, but near that. If you look at sectors, PSUs are doing well. You've got metals which are doing well, and we'll talk more about these names. And on the downside, you've got IT and real estate, pockets of stocks which are under pressure. Reema.
Well, auto is also not bad. The Nifty Auto Index is higher with names like Hero MotoCorp up close to about 3%, Eicher Motors, Tata Motors too, showing you some gains. And the big mover today is BPCL. So that's the top Nifty gainer. It's up close to about 4%. And Cipla too is higher. That's up 2.5%.
You know, guys, the stock that I was looking at for the better part of the afternoon was Polycab. The manner in which it kind of, surged back. And we all remember the whole saga around Polycab, tax issues, etc., the sell-off. The numbers, at least the top line and the profits, they look fantastic, blowing past expectations. Margins, you can quibble. But anyway, the market latched on to that. So that's one positive area in the mid-cap market. The mid-cap index, of course, is outperforming the large-cap indices today. And the good thing is that even right now, the market breadth is very, very strong. Over 1,400 stocks advancing at this point in time. So Polycab is one of them. The other are the gold financiers. They've also come back. Companies have maintained, both Manappuram and Muthoot, they've maintained that it's going to be BAU. It's not going to impact too much the RBI advisory on cash dispersals when it comes to gold loans. So those stocks have recovered a little bit. You have a couple of the life insurers where data has looked good. So life insurance is another space which, relatively speaking, at least has managed some green for today. But then, it's earnings season. So for every couple of stocks on the upside, every other day you'll have one casualty. And today's casualty is very clearly Intellect Design. And Reema will tell us a little more about why that stock is down 14%. That's something that we'll discuss on the show as well. But Nigel, tough week. Broader markets, Nifty, just trying to see that we don't cave in any further now in the last hour.
Well, the swing factor today is going to be the Nifty Bank. When it's moved up, it was up close to 300 points odd. That's for 7 straight sessions down, and this will be the 8th session. So you want to see some kind of relief come in for the Nifty Bank, but for the time being, that's underperforming yet again. You'll want it to get in the green and then try to conquer higher levels. Remember, if we can get past that 47,650 odd, that's the first level, then we can gradually move towards the 20 DMA, which is at around 48,200. So the Nifty Bank, that holds the key for the coming week, as well as for the remaining 60 minutes or so. But let's get in a quick technical check then. How do you trade the index? Mitesh Thakkar joins us. to help us out with exactly that. Hey, Mitesh, good afternoon. Well, that's sort of a wobbly market. We're holding in the green, but it's not very, very convincing.
See, I think, the overall bias is slightly on the negative side as I've been maintaining. And, I did mention that it will be a sell on rallies kind of market. So while we have kind of fallen about 800 points, we're trying to see some short covering and see some bounce back from oversold levels. The direction has turned down on the medium-term charts. So my sense is that I think, there could be a pullback and there is a good chance of that happening. But unless until we see a closing about 22,200, 22,250 zone, I think you will see these rallies kind of getting sold into. Barring FMCG, I'm not very positive on any of these sectors. And, that's why the index also, to me, looks slightly on the weaker side. On the stock basis, I have a buy on HUL, and that's been the sector which I've been recommending. HUL can be bought with today's low as the stop loss 23.20 and look for a target of around 24.10, 15 on the upside. While on the shorting side is IndusInd Bank, which I would suggest selling once it breaks today's low of 13.95. Then keep a stop at 14.15 and 13.50 should be the near-term target.
Okay, by the way, Amitesh, thanks very much for that. We'll come back to you in just a bit. Cipla is selling off. Those numbers don't look all that great. Miss on the margins, miss on the EBITDA as well. Profit is slightly above estimates, but that margin number at 21% is not looking, 21.3%, that's not looking too good. And as Ekta's poll also alerts us, it's a distance from the high levels of around 26% that the company's done in the past. But it was expected to drop, but it's fallen even more. And that's why the stock has sold off. Profitability numbers look slightly ahead of the poll. Now, we'll flash the US sales number when it comes out in the press release in just a bit. The expectation that one is working with is that you'll probably see a print around 230 million, which will be very similar to Q3. That's the US sales expectation. So let's see. But right now, the stock is selling off quite a bit. It's absolutely given up from 2%. Let's pull up the intraday chart as well from about a 2% high, which is where it was when the numbers came in. Now it's a straight vertical drop. The market's not liking what it has seen. Till we get our fundamental expert in on this, and we'll also get Ekta. Mitesh, you just want to quickly run us through levels. Cipla, was it of interest to you in the first place to begin with? And if not, then looking at the price drop right now, what are the levels you'd track?
See, as I said, I think, most of the stocks, have gone through some kind of a negative crossovers on indicators and averages on the short-term and medium-term basis. Cipla falls in that category as well. It had a good rally and now is showing signs of correction. The first support is the April low of 1345, and we're not very far away from there, but I suspect that the 200 average, which is now at about 1295, 1300, that level should be tested.
Okay. Let's talk about Cipla and the kind of reaction, the negative reaction to the numbers. Ekta joins in. Ekta, a miss on the top line and margins?
Well, yes, I think it's probably the margins which have disappointed a little more. So they've come in at around 21%. This compares to 22.5% in terms of an expectation, and versus 26.5% that they did in the previous quarter. So the expectation was that, yes, you are going to see lower margins this time, but it's come in on the lower end of what the street was anticipating. In terms of revenue as well, I think it's come in at around a growth of 7.4% on a year-on-year basis. Street was anticipating around 9 to 10% growth this time. So I think the miss has come in terms of the revenue as well as in terms of the operational performance. But overall, you would have to say that is not a huge miss which has taken place. We need to wait by for the internals as well, because we have the US business, more statistics which are coming on your screen, which indicates that the other income is higher, and that's probably aided profitability as well. What will be crucial to assess is basically how the geographies have done specifically for them. So for example, whether the US sales have come in within that range of around $225 to $230 million, which is what the street was anticipating. I think those kind of details will be crucial to assess how the stock would react further. But as of now, it's reacting to this revenue as well as this margin miss which has come through.
Okay, we have Forum Parekh, who's a research analyst at Sharekhan, now joining in. Forum, what's been the biggest disappointment for you? As Ekta pointed out, is it the margins? And in terms of the details, what is it that you're awaiting?
Yeah, so Cipla numbers is a mixed bag for us because Q4 is a seasonally weaker quarter. for the company, and therefore sales have come above our estimates. But as I see, employee cost and other expenses have gone up, which has kept a drag on the margins. Basically, we have seen in this quarter that other expenses have gone up because of higher R&D and higher sales and marketing expense, and this is across the industry, and which is there for Cipla as well. So therefore, I feel that this it's a mixed bag of numbers. Though I'm awaiting more numbers, more geographical numbers, but then it clearly shows that sales is above our estimates, which means US has performed good, and Revlimid must have done good. But because it's the other expense in led by R&D, which has dragged the margins down.
Well, the cut is getting deeper now. 2.5% gone on Cipla. Forum, how do the valuations stack up of Cipla versus its historical levels and peers?
So Cipla has been trading in a range of, 25, 27 on 2 years forward. But having said that, it is trading in its, it is trading in line with its historical mean. But we have other facts like Dr. Reddy's, which is quite attractively valued than Cipla, because we saw Cipla has run up quite a lot in the short run. But we are just awaiting for the numbers to see whether we can, re-rate the stock further.
Okay. All right. Thank you very much for joining in. Appreciate you giving us some perspective on this. That's a big drop underway on Cipla. Well, let's move on and welcome our next guest on the show. We have Prakash Diwan joining us in. Prakash, it's been all about really sharp result reactions in the last couple of days, right? I mean, the Cipla falling off the cliff, this Polycab on the other side. Anything that's sort of, really stood out for you with respect to the Cipla numbers and the kind of disappointment that's playing out on the stock right now because of this margin miss?
So for me, I'm not too sure whether margins at 21.3% should be really disappointing. Actually, the thing is the perspective vis-a-vis last quarter, which was a bumper quarter for them, that's what set expectations very high. But I don't think the African did all the way on.
Okay. Prakash, thank you very much for that. That's the reaction for Cipla. We'll await more details about how the performance of the US business has been. But right now, at least, you can see the stock reacting. Let's also invite Devin on the show. He's with us to walk us through the last 1 hour of trade of the day and of the week. But before that, Devin, I want you to comment on Polycab, because Polycab is clearly one of the stocks of the day. Big revenue beat, profits higher than street expectations. So Pasna gets us the earnings fine print, and then Devin, we would like you to comment on it. Pasna.
Well, Polycab reported a good set of numbers with revenue and PAT above our poll estimates. Revenue stood at 5,592 crores with an uptick of 29% on YoY basis versus the poll estimate of 4,979 crores. In terms of PAT, it stood at 553 crores with a growth of almost 29% on YoY basis versus the poll estimate of 480 crores. In terms of margins, the margins of the company stood at 13.6%, down about 50 basis points on YoY basis, and it was a slight miss as compared to the poll of 13.9%. Now coming to the segmental view, wire and cables was the key driver of the growth with a revenue growth of 19% on YoY basis, and margins stood at 15.1% versus the earlier guidance given in the range of 11 to 13% by the company. Now, FMEG registered a revenue growth of 17% on YoY basis and registered an EBIT loss of almost 46 crores from 6.9 crores on a YoY basis. The company says the losses have widened mainly because of one-time impact from impairment of investment in joint venture, Techno Electromech, and provisioning on aged inventory. Now, company says that the strong volume growth in wire and cable business was aided mainly by the strong growth of revenue of almost 29% on YoY basis. The revenue from international operations also rebounded during the quarter, with a 60% sequential growth, contributing to 7.7% to the overall revenue of the company.
All right, Upasana, thank you very much for that. By the way, yeah, those are lines coming in from the Cipla press conference. Let's listen to the management.
Soon in Goa, because I think the time has elapsed since the last inspection. There's good progress there, and of course on the biological side of the business, we are crafting together and trying to bring together a fair amount of synergies across the platforms of mRNA, across the platforms of biosimilars, etc. So all of that is in progress. We're also actively looking at distribution in India, and especially to the last mile. And we are changing a little bit of the model on our generic side to create more synergies between RX and GX. And so I think that is an activity that will probably get over shortly. But overall, I think we're off to, we think that this is that we've had a good significant year in the past, and we hope to be also driving forward quite strongly in this year. So with that, I'll pause, and very happy to take questions, and very happy to hear your views. Thank you.
Thank you, Umang. We will now move on to the Q&A session. As informed earlier, in case of any questions that you would like to be answered, please submit them in the Q&A box at the bottom of your Zoom screen. The moderator will read out your name along with your question in chronological order. We request that you limit your questions to 1 to 2. This will allow us to accommodate as many questions as possible within the stipulated time. Also, in case we receive the same question from multiple participants, we will read out the question that was asked first to avoid repetition. Over to you, Lynn.
Thank you, Sheena. We have the first question from Anju from the script. With the China side sailing through the pre-approval inspection, what can we expect in terms of the products, markets, revenues kicking in?
Anju, China is a Respules plant, and we are noticing Respules demand significantly high across most parts of the world. This is not, I'd say that this is just demand that we think every time we set up a Respules plant that it'll serve us for 5 or 6 years, and very soon, within 3 years, we get out of capacity. So the PI inspection and the outcome, and we received actually our EIR from that inspection just yesterday. So this is a Respules plant. I think it's going to supply the US, and it's going to supply some of the other markets that will soon get accredited and linked with the supply to the US.
We have another.
Oh, okay. We'll keep listening to the Cipla press conference and getting you important flashes from that. But let me get back to Devin. Devin, what about Polycab, right? After the slam dunk, the pressure that the stock took in December, it's pretty much recovered. And the fear was that maybe there would have been some business disruption in the Jan to March quarter because of the IT rates. But purely going by the numbers, it doesn't look like that IT rate impacted the business. And now things appear to be, business as usual. Your thoughts on Polycab and the competition that we're seeing in the sector, and how is Polycab positioned in terms of valuations?
Well, yes, thank you, Rima. I think the two factors will have to be looked into. One, of course, I think the building material segment in which they are operating, and the wires and cable business, where the demand is significantly high because of the larger amount of activities, constructions, new real estates coming up. I think that is where probably this company is fairly well positioned. And to my mind, I think given the kind of expanded capacity that they have, I wouldn't be surprised if they continue to grow on this particular business about 20% rate of growth on year-over-year basis, at least for next 3 years. So that is one. Second is the FMEG business, though comparatively smaller to the peers like Havells, which also, I think, performed significantly well, as we saw in the last week's result. I think this particular quarter has helped most of these companies in the form of getting the higher sales. A, an early summer, I think, which has possibly propelled higher amount of growth. And B, the April to June quarter is likely to be, I think, remaining significantly a bit as far as the FMEG sales concern or the white product sales concern. So that's why these companies are very well positioned. I believe Polycab at this point of time, well valued. I think why value-wise, I think it's fairly valued, I would say. However, given the growth rate, I think, and the profit along with, it is appearing that this company would probably remain strong as far as I think price outlook is concerned. Slightly premium traded, but I think otherwise it should be considered good to buy when market gives downside opportunity in the stock.
Right, hi Deven, good afternoon. I wanted your views on BPCL. It's surging in trade. The numbers look quite good. Sonal joins us to run us through the con call takeaways as well. Sonal?
Thank you so much for that. Well, BPCL is the top nifty gainer, and the conference call was held during market hours today. And in terms of their debt, which is reduced 50% on a YY basis, the company says that they're comfortable at the current debt levels. Gross borrowing to equity is at 0.25 times, and they're comfortable at these levels. And there are a lot of new investments that the company is planning, but they do not think it will put any pressure on the balance sheet. Product cracks did see a sharp fall in Q4 globally, but the company says despite that, GRMs were at a premium to Singapore GRMs. The domestic market sales grew at 2.09% in the quarter, and they've also been able to increase market share across products, but especially petrol and diesel. Their lubricant business saw the highest ever sales volumes in FY24, and for FY24, they imported crude to the tune of 36 million metric tons, out of which 39% came in from Russia, and they expect this contribution to continue in FY25 as well. And they say Russia will continue to play an important role in crude imports for the country as well. However, they see the discount on Russian oil narrowing to $3 to $6 per barrel versus $8 to $10 per barrel that was there in FY24. So maybe we could see the premium narrowing down in FY25 as well. But they say as long as crude is between that $80 to $85 per barrel mark, they are comfortable with marketing margins, and they will be able to be profitable in marketing segment as well. They do have some maintenance shutdown plans in July and August, so that could impact Q2 FY25 numbers, but for now they sounded very positive.
Okay, all right, got that, Sonal. Thanks a lot for that. Well, Devin, what is your view on BPCL?
Well, Nigel, I think the couple of points one we have to look into. Of course, I think this last quarter gone by, the margins are not same as they earned in the December quarter. And we all talked about it. December quarter was probably exceptionally high quarter, wherein they had the advantage of the lower cost as well as I think the market-driven prices. In this particular quarter, because of the elections, I think the market-driven price scenario is ruled out, whereas I think the raw material cost has remained slightly at an elevated level. But market probably, I think, understand this subject so well. I believe that I think after the election gets over, they will have the ability to increase the market price and of the fuel. And that is where probably I think we are likely to see relatively better performance going forward. If not in this quarter, maybe I think in the next quarter, year after. As such, I think on the other side, the more important aspect, companies systematically putting new money in expansion activity, be it in the area of renewable rate initiatives, or be it in the area of, I think, expanding the current refining capacities. Given that possibility, and along with, I think, higher amount of blending which is happening for ethanol, I believe that I think the possibilities of company maintaining relatively better performance, I think, is not ruled out. As such, the valuation-wise not too expensive. So maybe the downside is protected in the stock price currently.
Okay, that's a word on BPCL. Asian Paints, by the way, has managed about a 2.5% sort of an up move. Devin, before we wind up for today, I think in this season, two results from the consumer space stand out, which got obviously a very negative reaction from the market for obvious reasons. One was Titan. This whole idea about higher competition, that's really weighing on, I think, the street's mind. And then there was a miss from Asian Paints. What have you made of both of them? And would you be buying into this dip on the stocks?
So yes, I think, of course, both these companies are adequately priced, so they don't have any chance of making any error in the business. That is one thing for sure. However, looking at the Asian Paint, I believe that I think this company looks reasonably promising and well set. Do agree that I think on one side there has been some pressure on the margin because of the prices and derivative prices along with. But I believe that I think that's not something which should take away the larger prospects for this company. On one side, if you are considering higher amount of growth in the real estate space, the growth in the construction space, and anything which is on the surface coating side of activity where this company is positioned, I believe that I think they are very well positioned from the point of view of taking the future demand to their. So to a greater extent, I think any correction in the price definitely means a buy opportunity. So don't expect, I think, such a big jump, I think, which we saw post-COVID to this counter. I would think that I think corrective price could be an opportunity to buy at a slightly lower level, current level at this point.
Okay, well, Prakash, thanks. Devin, thanks very much for that. So that's a quick view coming in on markets and a fair bit of stocks. You know that Cipla Q&A is still going on. This one line caught my eye. They're saying that would be open to market Eli Lilly's weight loss drug in India. You know, that's essentially the, that's of course a big blockbuster globally. And I'm not sure if the Eli Lilly drug is Ozempic or it's the other one, but it's a big class of drugs estimated to have sales of about $100 billion worldwide. You know, Dr. Reddy's, I think, is doing something in that sort of sense, in that particular product space, and some comments coming. I'm not sure if this is new, and Ekta should be able to sort of join us again once that Q&A is wrapped up to get us a full picture of what are the most important takeaways there. Stock is seeing a bit of a recovery from the day's lowest point at about 1348, 1347 or so. Well, you know, politics, of course, is the other big story this season. And the big update from Delhi, of course, is the fact that Arvind Kejriwal has gotten interim bail from the Supreme Court. Ashmit is here with details. Ashmit.
Well, a hugely significant development this. A sitting Chief Minister, Arvind Kejriwal, arrested. That made headlines in the month of March. And since then, there has been an outcry from the Aam Aadmi Party that opposition leaders are being targeted, not being allowed to campaign in the ongoing national elections. And that argument appears to have struck a chord with the Apex Court. Through the course of this week, we saw detailed hearings take place before the Apex Court. And in the course of these hearings, the Apex Court made some very pointed observations. Number one, the Supreme Court said that they're not looking to differentiate between the common man, the Aam Aadmi, or politicians, that they're not looking to make that distinctions. But nonetheless, the Supreme Court said that national elections come only once in 5 years. If not for the national elections, they would not have considered this relief, this interim relief of interim bail. But that this situation that we are currently seeing, a sitting Chief Minister behind bars, that falls under the category of exceptional circumstances. The Supreme Court had also observed earlier that as far as deciding the larger question of whether or not the ED arrest was legal, that decision will take time. But if this time is taken, then this time allowed for campaigning will not come back to Arvind Kejriwal. It will not be available to him. And that, we understand, has formed the basis of this relief coming in from the Apex Court. Today, the hearing was very, very brief today. It lasted barely a couple of minutes. The Supreme Court spelled it out very clearly that they've made up their mind. They will be passing orders for releasing Arvind Kejriwal on bail till the 1st of June. So that's the interim relief that has come his way. What is also important is that an observation that fell from Justice Khanna. He said in the course of the hearing that he was arrested in the month of March. He's been in custody long enough that 21 days of relief will not quite impact the investigation process. Just to give you context, important to bear in mind that 2 weeks from now, May 25th, is when Delhi will be voting. That's where one of the key areas that Aam Aadmi Party will be contesting from. And then subsequently, on the 1st of June, Punjab goes to polls. That's another key area that Aam Aadmi Party will be contesting. So essentially, that's the window that Arvind Kejriwal has been given, a 21-day window within which he will be allowed to campaign. We will have to watch for whether or not any conditionalities that have been imposed as a part of this order. In the course of the hearing, Arvind Kejriwal's counsel had submitted that Kejriwal will not be signing files, will not be attending his office. We'll have to watch for that. We'll also have to wait and watch whether this order acts as a precedent or not. Let's bear in mind that just earlier today, there was also an application by former Jharkhand Chief Minister Hemant Soren, who's also cited similar grounds, that he's not able to campaign, that this is the national election. So we'll have to see whether this forms a precedent, whether investigating agencies can arrest such highly placed personnel, whether that's Chief Minister, elected representatives, when it comes on the eve of election. So all details now, all eyes now on the text of the order that comes from the Apex Court. We heard the oral directions. We are now following up with the Apex Court for a formal order copy, which of course will have more details on the way forward.
All right, Ashwin, thank you very much for that. That's an important developing story over there. By the way, Bank of Baroda numbers have come in and they have beaten estimates on the net interest income front and the profitability front. And the asset quality has actually improved as well. Gross NPAs have come down quarter on quarter. Loan growth looks quite decent. I think I saw a 13% number flash by year on year, and there's a 4% sequential growth in the business loan growth. And the market is giving a thumbs up to those numbers. Let's take a very, very quick break on that note. We'll come back on the other side, keep the conversation going. We'll also have Shibani Sarkar Kurian of Kotak Mahindra AMC to give us some perspective on the market.
Welcome back. You got the market, which is up 80 points. So the good thing is, while at higher levels there is selling, but it's not like a slam dunk on the way down as well. And there is some resistance being offered as the market sells off and some buying starts to come in as well. So that's a good thing. So holding on roughly with at about 22,040. Shibani Sarkar Kurian is with us, Senior EVP and Head of Equity Research at Kotak Mahindra AMC. Shibani, good afternoon. Good to have you with us here. Later today on our next show, we're gonna put out a piece looking at earnings for the quarter, and about 52% of the companies have reported. I'm looking at the NSE 200 set, the most liquid names out there, and I'm just looking at how earnings have moved for this bunch. That is for F525, based on beats or misses in the fourth quarter. And there are more downgrades to 25 estimates than upgrades, at least in this sort of 200 bunch. And only, as I said, only about 104 odd companies have reported. Just your own sense, Shibani, and what you and your team are making of the earnings season, and what is it doing to forward estimates? Yeah.
Sure. Hi and good afternoon. So you're right. Earnings is what the entire market is focusing on, apart from some of the other events. But of course, when you look at earnings so far, the way we have analyzed earnings across our coverage universe, earnings at a broad level have been largely in line with estimates. So while you were talking about the 200 set of companies that you have looked at, if you look at just the Nifty 50, so far about 34 Nifty companies that have reported numbers. At a headline level, if you look at just the earnings have been slightly actually ahead of estimates. However, when you look at earnings a little closely and dig a little deeper, one factor clearly stands out, which is that domestic-facing companies and domestic cyclicals continue to contribute to the overall earnings momentum. While if you look at segments such as oil and gas, metals, etc., where earnings volatility continues to remain high. So even so far, if you look at the numbers that have been reported, sectors such as cement, autos, financials, and even to some extent capital goods clearly have contributed largely to the earnings. So far, if you look at the numbers that have come out, if you look at FY25 and FY26 Nifty earnings estimates have been by and large in line and they have not been cut significantly. Of course, we still do have some way to go. But I think the premise that we have been working with where earnings is concerned has been that domestic facing sectors and domestic cyclicals will contribute to earnings even in 25 and 26. And if you look at the numbers that have come out so far, that premise continues to hold true.
Okay, all right. Hi, Shabani. Good afternoon and good to see you. I wanted to ask you about the result of yesterday. That was SBI. The stock has already been a big outperformer. I was reading a Macquarie note. They are saying that the valuation gap between the public sector banks as well as the PSUs, it's the lowest we've seen in multiple years. And the suggestion is that maybe, in fact, the best of the good news is already in the price for some of these PSU names. And they've highlighted that for SBI, the deposit growth grew only by around 3% on a sequential basis, which is half some of those large private banks. What is your view between the two? It seems the PSUs have the momentum. Some of the private sector banks have the valuation cushion. Your take?
Yeah, so over the last year and a half, we've clearly seen multiples catch up where some of the public sector banks are concerned, primarily because there has been improvement in their return ratio profile, and ROAs, if you look at the pack as a whole, have merged closer to 1%, where ROAs earlier for the PSU pack used to be considerably lower, and that has led to the multiple re-rating. Now, from here on, our view on the sector is slightly different. We are looking at the sector in terms of those banks, both private as well as public, which have liability franchise, which should help them in terms of the current interest rate environment and help protect margins. So our focus is specifically on the larger banks, both private and PSUs. Here we believe that in this current environment where the rate cut cycle appears to have been pushed out a bit, margins will take focus and center stage. If you look at the numbers that have come out so far, it's clear that some of that margin pressure that we were witnessing is now seemingly bottoming out, where the cost of deposits have repriced to a great extent. And therefore, banks which have better liability franchise should be able to manage margins better. The second factor, which I think will be a key differentiator, will be how credit growth pans out. Our belief is that given the kind of regulatory actions that we have seen, there should be some moderation in terms of growth, especially where unsecured lending is concerned. And therefore, credit growth will also be a differentiating factor. From a valuation perspective, we do believe that the larger private banks and some of the large public sector banks still offer risk reward, which is in favor, especially given that we believe that return ratios should remain healthy. Credit costs are still under control, and there's been no major concern as far as asset quality is concerned. So therefore, from a banking perspective, we are looking at the larger pack, specifically some of the large private banks and few of the large PSU banks.
Shabani, the big positive earnings surprise this time has been the consumer staples, suggesting that there is a rural recovery. Were the staples a part of your portfolio before, and now, given the the data points that we are getting, would you start adding them?
Yeah, so Rima, I think a couple of months ago on your show, we discussed the same in terms of our view where some of the staples names are concerned. Now, while the numbers have not shown up any major surprise in a big way, pointing to a sharp recovery on the rural side, we have been of the view that the rural demand appears to have bottomed out. Our expectation is that slow and steady improvement should be visible where rural wages are concerned. Couple of factors here. One, inflation has now started to come under control, and food inflation should stay largely stable or moderate down. So that's number one. And secondly, the hope, of course, is pinned in terms of how the monsoons pan out, which could lead to better Kharif output, which again should be positive from a rural income perspective. If you look at the commentary that has come out from most of the companies, commentary does seem to suggest that there is slight improvement in rural demand, and therefore, that is reflecting in terms of the view on the FMCG pack as well. We have to caveat it to one extent, saying that the rural recovery will not be a sharp V-shaped recovery. It will be slow and steady, but definitely our belief is that the demand environment seems to have bottomed out where the rural sector is concerned.
Do you play the rural, slow and steady rural recovery demand via, say, two-wheelers like a Hero MotoCorp? Or would you look at staples also, where hitherto valuations were a bit of a concern?
So we have played it across segments. So two-wheelers clearly has been one part of our portfolios where we have played the rural recovery, and that is something that is panning out fairly well. Here we believe that in pockets, valuations still do offer risk reward, which is in favor. And therefore, two-wheelers continue to be a part of our portfolio where we are overweight on. Within the FMCG pack, we have select holdings in the portfolio as well. We have looked at companies where valuations have now trended lower than long-term averages, and therefore those are some of those names within the FMCG pack which we have evaluated. We've looked at some of the financiers also, which could benefit in terms of rural recovery. So we've tried to play the rural theme across sectors, with two-wheelers being one large segment apart from the FMCG plays.
Okay. Shivani, finally, I was just thinking about some of the highlights of this week, and one of them was, of course, NCR real estate, right? We got to know that yet another DLF launch got sold out in some, I think, 3 days or 4 days or something like that. So, finally, what do you make of this entire pocket? Real estate and the related plays, the ancillary plays on home improvement, etc. It's already been a fantastic run, but the question is, can one still make fresh investments here? What would your advice be?
Absolutely, the real estate space has been one significantly strong performer, not just in the last quarter, but it's been something that has happened over the last maybe year and a half. The way we are now approaching this segment, of course, in pockets, real estate valuations appear to have caught up. But if you, as you rightly pointed out, the ancillary space, which is the building materials segment, that is a segment that has largely been lagging. Now, while we have seen significant growth where real estate sales are concerned, the same is not reflected where volume growth in segments such as, say, tiles, ceramics, etc. are concerned, where volume growth has still not picked up. In pockets, for instance, pipes, we've started seeing that already take place, where volume growth numbers are showing the improvement in demand from the real estate pack. But our belief is that building materials could be a segment where once the real estate sales come to a late stage, that could see an improvement in terms of growth, and margins should hold up because input costs have largely been under control. So the entire building material space is something that we have been evaluating. The second way that we have also invested in the real estate and ancillary space has been cement, where we believe that demand both from infra as well as real estate pack continues to drive volume growth. Pricing is something that we will watch out for, but consolidation in the sector should lead to better pricing behavior is what we believe. And therefore, cement, building materials is a segment where we have been fairly positive on.
All right, Shibani, very quickly on cement, large cap names or the mid and small cap?
So, as I was mentioning, cement is a sector which is seeing significant consolidation. We believe that the consolidation trends will continue. And in that segment, therefore, the large cap players will be better placed. And of course, we'll watch out in terms of how pricing plays out. But yes, large cap appears to be better placed vis-a-vis some of the mid cap names in the cement space.
Right, Shibani, good hearing your thoughts as always. Thanks for joining in and wishing you a good Friday and a good weekend ahead as well. Well, talking about the weekend, just look at Zomato. The stock has moved to the high point of the day and it's moving on very, very large volumes. I think that stock should come up for you on the screen. And the other one we're looking at is Hindustan Zinc. We are at CNBC-TV18 at around 300, 330 rupees. Or we said that the only way to play zinc as well as silver in particular here in India, is Hindustan Zinc. But just one more caveat here, that the float in the market is very limited, only around 2% is in the market. So just want to warn our viewers as well, the stock has moved up, it's more than 500 rupees odd, valuations have gone through the roof, but the float is very, very limited, so just keep an eye out on that front as well. But it's that time of the day when we get in Nimesh to tell us what's going on D Street chapter. Well, Nimesh, finally some green on the screen. We haven't had that at around 3 p.m. all of this week, but today some green.
Well, a decent pullback, so to speak, Nigel. And this was something we spoke as well, yes, right? The market looked a little oversold. Some technical levels were suggesting that maybe we'll see a bit of a pullback, from those extreme levels. I guess still I believe that 21,800 on the Nifty is a very crucial level on the Nifty level to watch out for on the downside. Having said that, the FIs are still better sellers. In fact, the number that we saw for the last couple of days, almost 23,000 crores of selling from the FIs. My sense is it's been quite speculated as well that a couple of large hedge funds are big sellers. Some portion of the selling is still pending, is what I understand. So maybe that will take another few days to consume, and maybe that's the reason why you'll see selling pressure from the FIs to continue. I guess the fourth phase, which is on Monday, that will be a very important trigger to watch out for, because that will set the trend for the last three phases as well. Apart from that, the earnings is something to track, and as I said, the reversal of the FI flow will be very important for this momentum to continue. So maybe another few days of range-bound trade with 21,800 acting as a very strong support. That's something to watch out for. But I guess it's just a pure pullback from a very oversold. FIs are still better sellers.
Well, that's right. Make sure we look at two goalposts. One will be the swing low of 21,777, and on the upside, the 20 DMA, which is around 22,300. But individual stocks, tell us, what are you picking up?
Well, in terms of individual names, the first stock on my list is Coforge. While the entire IT basket is under pressure today, Coforge stands out and is a big mover, up 3%, large volumes as well. I guess the sense is maybe the company is likely to raise funds by QIP very soon. And I understand the company is already on a roadshow for that fundraising. So something to watch out for in Coforge going forward. The second name is Anantraj. Within the real estate name, this is buzzing off late. Again, in today's trade, the volumes on the higher side. Apart from being a real estate player, it's a proxy data center play as well. And some of the larger institutions now have started looking at this stock very closely. So that's the reason why Anantraj is buzzing off late. And the third name is Sun Pharma. Within the pharma names, this is one stock which actually stands out while the stock is pretty much consolidated and in the green. But there are sell flows, though small, but there is selling pressure in Sun Pharma in today's market.
Okay, thank you very much for that. Remember, Coforge is planning a QIP to fund the Cigniti acquisition that they had announced earlier this month. We'll get into a break on that note. On the other side, we'll get you a few BTST calls, maybe for the weekend, from our technical experts. Stay tuned.
Welcome back here with us on Closing Bell. And the market continues to be absolutely range-bound. Not much has changed. But the fact is that the Nifty is now looking, well, almost as green as when we started the show. Let's go back to Mitesh, get some final trades in before the week wraps up. Mitesh, so what's the advice? For what it's worth, it looks like we'll manage a close above 22,000.
Yeah, just I think managing to do that. But as I said, I think the pullback doesn't improve the overall technical structure. So I think that bias slightly is still on the negative side, and I would still want to sell once we get closer to 22, 150, 200. On the stock side, ACC is a STVT, sorry. ACC is STVT. I think that's closing weak. So keep a stop above levels of 2380 here. Look for targets of 2320. And Astral is a buy. I think that's closing near the day's high. Good breakout here. So It's not a BDSC, but it's a short-term buy with a stop below 2120 for targets of 2250.
Okay, thank you very much for that. Let's talk about Bank of Baroda. The numbers prima facie look good, but I think the stock has reacted negatively now. Abhishek joins in with the fine print. Abhishek.
Well, Rima, to begin with, Bank of Baroda, the deposit advances growth are one of the best that you are seeing on a sequential basis. At least in the last 4 to 8 quarters, what spooked the numbers is the provision number. Provisions almost doubled on a sequential basis. So we need to watch out with respect to presentation, what are the slippages and what are the kind of provisions that the bank has actually done. Deposit growth is at 10.2% YOY and 6.6% sequentially. So sequential growth is one of the best in last 8 quarters, and this is largely driven by the international deposits which have grown robustly as well. Advances growth at 12.5% YOY and 3.9% sequentially, while sequentially is one of the best in last 4 quarters, but we are used to seeing Bank of Baroda growing at 18% plus over the last 3 quarters. So this loan growth on a YOY basis at 12.5% odd is perhaps on the lower side when you compare to the previous quarter results. Now other income has boosted the PAT this time around. It's grown at 20.9% YOY and 49.1% sequentially. The provisions have spiked up a lot, 95.5% growth that you are seeing on provisions on a sequential basis. Asset quality has improved as a ratio. Gross NPA ratio is perhaps one of the lowest that you are seeing in last 9 years or 36 quarters. Net interest margin has expanded 3.27% versus 3.1%, including all the one-offs, that is the other income and the provisions that they have made. The ROA is at 1.25%, perhaps the best that you are seeing in last 26 quarters. In terms of their PNL, both the NI and PAT are ahead of our poll. Back to you.
Okay, thank you very much for that. So NII and profits ahead of poll, but there is a sharp increase in the slippages and the stock is now down close to about 4%.
This is a sharp cut.
Sharp cut, right? When you just looked at the NII and profit, it looked pretty okay. But as Abhishek pointed out, there is an increase in the slippages. Hemang Jani is now with us. Hemang, SBI numbers, were an all-round beat, very strong numbers. But weigh in on Bank of Baroda and now the call between BOB and State Bank of India.
Yeah, absolutely, Rima. This result season has been tough for most of the participants. And what we're seeing is that wherever the numbers have been strong also, we have seen a bit of a negative reaction, and one can always say that maybe, before the numbers we had a strong move, and now our markets are underperforming, and that may be the reason. But I do think that, when we look at the PSU banks, by and large, the numbers have been good, particularly State Bank on all parameters. There was a beat, significant beat, all-time high profitability. And also on the slippages front, while BOB, we had a bit of a disappointment. In case of SBI, slippages were slightly lower than the consensus, and the outlook also on slippages is quite good. So I think maybe there is a little bit of selling which is happening in the market. But some of these companies where the numbers have been strong, I think we do see them as an opportunity to buy.
Okay, that is the take on a couple of the banks which have reported numbers. Let's move on. I think we've got Ekta now joining in. Okay, we'll have her in the next couple of minutes for a final takeaway from that Cipla call, because Cipla was the one disappointment that has played out today. Hemang, good to have you on the show. Anything else that stood out for you this week in terms of earnings where the element of positive surprise is enough to initiate a fresh buy? I mean, let's go back to FMCG, right? The week started with this big FMCG rally, but it fizzled out Tuesday onwards. But I don't know if that was enough for you to look at a fresh call.
FMCG, despite the fact that we had some management saying that there is a little bit of positive, green shoots when it comes to the rural side, the fact of the matter is that the numbers have not been that great, except maybe, something like Godrej Consumer, or Marico. If you look at the large companies, particularly HUL, Nestle, the recent one being Asian Paint, the volume growth was not that strong. So I think the little bit of rally that we saw in the FMCG names is just a sort of a technical pullback. I don't see any significant case of re-rating over there. So I would certainly not get too excited. I think ITC and Tata Consumer, these are the two names where if we have a positive surprise, maybe these are the names that we would be comfortable buying into.
Okay, thank you. Do stay on, Hemang. We need to slip into a very short break. Less than 10 minutes left for us to wrap up today's trading action and the week.
Okay, welcome back. Three-digit gains and hopefully, fingers crossed, with 7 minutes to go for close, it'll be like that. And we can say that, well, the market ended 100 points higher after, of course, the kind of week that we've had. I think that should be sort of good news. For the week, if we end like this, the Nifty will still be down 400 points, Friday to Friday. So let's see. But, Cipla is what we were discussing earlier. That Q&A session was going on, and we kind of sort of compress it together with what the key takeaways really are. So just want to sort of play that out for you.
Well, yes, Cipla actually, what was a disappointment was also the US business this quarter, which I mentioned. $226 million is what they've reported. The street was anticipating up to around 230 million plus in terms of revenues on the upper end, and hence that's probably been a disappointment this time. The company did mention that the base level margins for the company, or the base level sales for the US, should be $215 to $220 million. US sales will be responsive to launches going forward, and it should probably be higher than last quarter. Now, margins, they did decline. There was some amount of, freight costs on account of the Red Sea, which were higher this quarter. But they did see seasonality, and that's the reason why you've seen this year-on-year, decline in terms of, or Q-on-Q decline in terms of margins. Guidance remains at 24 to 25%. Now, in terms of key approvals, a Brixon approval is dependent on the clearance of the Goa facility. They are closer to remediation of the Indore plant. They would be open to marketing Eli Lilly's weight loss drug in India, and they are working on a weight loss obesity drug in India as well. So that should probably be a future trigger. But in the near term, I think it would be the margin improvement, the US sales moving up, which would probably be important to watch.
Okay, thank you, Ekta, for that. Hemang, we were just chatting with one of the analysts when the Cipla numbers came out, and they said that between Cipla and Dr. Reddy's, there is perhaps more valuation comfort with Dr. Reddy's. Cipla has run up quite a bit. I think it's up more than 50% in the last 1 year, while Dr. Reddy's is up close to about 20%. In the pharma pack, how does Cipla stand in the pecking order?
So Cipla, the numbers, both on the US business front and on the margins front, there was a bit of a disappointment, and the guidance, I think, is pretty much in line. Also, in case of Dr. Reddy's, we had many one-offs, and the numbers were not looking that strong. So if we have to, put out our preferences in the pharma space, I would be more comfortable buying into a Sun and Aurobindo Pharma, because we think that, in terms of growth outlook, particularly in terms of valuations, Aurobindo, stands much better compared to a Cipla or Dr. Reddy. So these are the two names that we would be comfortable buying into.
Okay, as we are getting down to the final few minutes, by the way, Zomato is surging big time. Results come out over the weekend, and the stock is up almost 4% right now. It's done well. I mean, in a market which has been consolidating this week, it's been a pretty decent showing from Zomato. Hemang, any interest in the stock? It's been quite the turnaround story, right? It's had a good last couple of months.
Absolutely, I think it is one of the best performing names in the platform space. And look at the way month on month the data points have panned out. So I think people will be more than comfortable buying into this purely from a quarterly number perspective, or even from a let's say 12-month perspective. Simply because we have very few successful stories where you can have a little bit of visibility over the numbers of the next 3 to 4 quarters. So very positive view on Zomato.
Hemang, thank you very much for joining in, counting down to the day and the week. For the day, we're ending at 22,050. So after breaching that level yesterday, at least today we managed to hold on to it. So 350 points were lost yesterday. Of that, we seem to have recovered close to about 100 odd points. But for the entire week, it's still going to be a cut of close to about 2%, while the mid-caps are going to go home with a cut of 2.7%. Despite the relative outperformance today, the mid-cap index ending with a gain of nearly 1%. The big star sector was FMCG today as well. It saw some gains, 1.25% higher for the FMCG index. Autos did well today. The Nifty Auto Index was up 1%. PSUs continue to flip-flop, one day up, one day down, but today seeing some strength. In the PSU basket, it's BPCL, which deserves mention. Strong numbers. The management commentary in the conference call was positive. There is a bonus issue of 1:1. BPCL, NTPC, some of the gainers. Along with that, Power Grid. Asian Paints recovers after yesterday's big fall. Hero MotoCorp is the big winner for the week. 2% up today, 7% for the entire week. And on the way down, IT came in for some pressure. The Nifty IT index down 1%, with TCS weak, and Cipla, of course, reacting to the numbers, and Cipla ending down 1.5%.
Yeah, that was a disappointment that played out on Cipla. But otherwise, the mid-cap market has had a very good comeback. As we're looking at stocks on the upside, Polycab definitely was the stock of the day in terms of positive earnings reaction. Muthoot and Manappuram managed a recovery 4-5% higher after the midweek jitters with the RBI norms on cash disbursements of gold loans. What else? If we talk about top volume gainers, then some of the other names, the other gaining names, included Zomato, which we were just discussing. Restaurant Brands Asia, 4% higher on big volumes actually playing out. And then you have a couple of names from the PSU side, including Hindustan Copper, SAIL, some of these metal stocks, PSU metal stocks, having a pretty good session for today. Bank of Baroda, by the way, is ending almost 3% lower, so that goes down as another negative result reaction. Actually, a lot of PSU banks were weak today. SBI, Bank of India, Union Bank, not the best of days for PSU banking. Speaking of banks, the Nifty Bank is ending absolutely flat, underperforming the Nifty. Not much headway on the Nifty Bank for today. Well, with that, it is curtains on trade for today, this Friday, as well as this week. But don't go anywhere, because our Friday special Editors Roundtable is coming right after this break.